The broadcast is now starting. All attendees are in listen-only mode.
All right, welcome to the Spark 6.7 release webinar. I'm Emily McCarty, one of the customer success representatives here with Eric Mao, and we're going to go over the changes made to the Spark platform for this newest release. First, we're going to cover what's new. Next, we'll go over what has changed on the platform. We'll cover what's been fixed. We'll do a quick demonstration, and then we'll roll into any questions that you all may have. And as you can see on the bottom of your screen, we're going to release this new software this coming Saturday, April 13th, starting at 9 p.m. So now we're going to roll into what's new on the platform this time. So one of the biggest things that we did was updating the financial analysis. And so something that you all are going to really enjoy is that we now have default periods for your financial analysis. So instead of having to create new periods each time, you're now going to have historical, interim, and projected periods that are automatically created for your financial analysis. Now let's say that you have zero interest in looking at projected periods. You can go to your Spark admin configuration and update it to where that's no longer a default period that shows up. But just know that you do have that flexibility now, so that'll be pretty nice. We've also improved the synchronization of the debt schedule. So what that means is essentially the other project debt, which is going to be any additional financing from the terms section, is now going to flow directly into the debt schedule for your financial analysis, as well as any existing business debt is also going to be documented from the entity's debt schedule, and it's going to be automatically flowing into Spark. And if you need to override any of these two debt schedules, you can also do that. But just know that if you put it into the new and improved debt schedule we built, that's going to flow into your financial analysis. We've also got a stressed financial analysis feature. So now on your debt service coverage in your financial analysis, you'll be able to set a default shock rate. So we've currently set it to 2.5, and if you need to adjust it, you can certainly do so. That's going to be done through your admin configuration. And the three variable rate sub-accounts that are stressed will be the proposed loan, other project debt, and the business debt. You'll also notice that that stress financial analysis is going to be available on your consolidated statements. So just keep that in mind that will be a new feature if you want to use it, as well as a net worth reconciliation. This is going to show up as a new tab on your financial analysis. And if you don't want to see it or don't need it, don't use it, that can be configured to disappear from your financial analysis as well. We've also added the comparisons from RMA data. And this is going to be a premium Spark feature, so that's going to be available with an additional monthly cost. So instead of using the ratios tab on the financial analysis, it would be replaced by a comparisons tab. So if you and your organization are interested in having RMA data as part of your financial analysis, just reach out to the Spark support team and we can help get that set up for you. Additionally, we've got base rates that will be automatically updated. So you're going to see your 5 and 10-year Treasury rates, as well as your SBA 10, 20, and 25 rates be automatically updated. For some of you, this might mean seeing an update every single day when you log into Spark. So just keep that in mind. You'll have that apply new base rate banner that's going to show up. Additionally, we've got snippets that have been updated. So now you can actually have a default snippet. So if you are a global snippet manager, then you can designate a certain default snippet for commentary fields. So for instance, you can now have SBA eligibility commentary with a snippet, as well as sources of repayment with a snippet. If you choose to use the default version, it's going to automatically fill in that default snippet each time you go into that specific commentary field. If you want to delete it, you have to put in an NA or something else to clear out the field, because you can't simply delete a default snippet. So I think Eric will probably show you that functionality in the demo. Other new features that we had with this, new features that we had with this release are the FERS number is now available in your lender settings. So on the SBA Form 159, you'll notice there's a place for your FERS number. That wasn't previously filling in, and now we actually have that being pulling in directly from Spark onto your SBA Form 159. Another cool feature is the ability to designate a test package. So instead of having to create test loan and make that demarcation in the name, you can actually do it in the edit package section. There's going to be a switch that you can choose yes for a test package, and then this test package won't show up in any of your reporting information, and you'll be able to see on your home page that that's a test package as well. So it allows you to kind of try out some new features without having to use one of your actual loans as the guinea pig. Now we're going to move into what's changed on the Spark platform. So currently we've made updates to our debt schedule. And this is going to look a little bit different than what you've seen previously. With our debt schedule, we've now broken it down into businesses and individuals. So when you click into it, you'll actually be able to see it's separated out by all the businesses you have listed on your loan, as well as any individuals. And as far as the data entry is concerned, it's now set up in a grid-like pattern, so you can actually work across and see each of the sections that you're updating on the same page. It makes it for a nice, clean experience. If you enter in enough information, it will actually auto-calculate your payment. So for instance, if you're able to put in the original balance, the term, and the rate, then you'll have your payment auto-calculated. If it calculates incorrectly, you can override it. You'll be able to designate the fixed and variable rates, which then, as you see noted here, will pull into your stressed analysis for those variable rates. And you can also send an information request for debt schedules now. So you can send it directly to an individual, asking them to fill out the information related to their debt schedule. We've now also allowed you to change the lender product relationship on a package. Before, if you were a multi-lender provider that also had multiple products, you could associate any product with any lender. And what has happened in the past is occasionally you would associate a product to a lender that it's not supporting that product. So in this case, the lender and products will now be linked. So you'll no longer have a lender trying to support a product that it's not set up for. Now, this is going to be controlled on the Spark administrative configuration. So if you need to make any adjustments or have any questions about linking lenders and products in Spark, just reach out to the support team and we can help you out with that. Additionally, we've changed the prior SBA loans question. So this is a requirement that we need to designate where you're getting if the business has any prior SBA loans. Today we were looking at the debt schedule to see if the business or individual had any prior SBA loans. After this release, we're actually going to be looking at the business history questionnaire, because that is being asked already and is a better source of information to guarantee that we're letting the SBA know of any prior loans for the package. We're also going to require that 100% of the ownership is designated in Spark. This is part of the new SOP requirements from the SBA, so you will have to designate 100% ownership. As part of the credit summary, we will now include all project source of funds. So this will be seen in your terms section. So that additional financing section in the terms is now going to appear on the credit summary. And this will be particularly helpful to those of you doing 504 loans. Instead of just showing the primary financing, you'll also be able to see that additional financing from the CDC. And a couple of more of the improvements that we made were to the closing cost. That's no longer going to be mapped to the working capital section of Form 1920. Instead, we've put the closing cost in the other column on Form 1920. So whenever you have that included in your sources and uses table, it will no longer be designated as working capital. We also have in the project accounting feature, we used to lock the package. When it was withdrawn or declined, you had to restore the package, and then let's say you had a refund to make for the loan, you'd have to unlock that package in order to get that refund out. Now, project accounting is not going to be locked if you withdraw or decline a loan. So you'll actually be able to more easily get those refunds if that should happen. And we did fix a couple things as well. So some of the key improvements and fixes are deleting a package with any disbursement credits, and being able to have quarterly payments and the debt service coverage for the proposed business debt. We used to previously assume that all of the payments in the debt service coverage were monthly, and now we're going to honor the payment frequency to whatever you have listed in your terms. And now I will turn it over to Eric Mao, and he'll run through the demonstration for you.
All right, thanks, Emily. Let me just pop open Spark here. And Emily, just a quick confirmation, you can see my screen?
Yes, I can see your screen.
All right, excellent. So we're going to go through about 4 different demos here to cover the updates that'll be coming this Saturday. The first demo will be around test packages, giving an idea of how those work within Spark. We'll then go through some of the snippet updates that Emily referred to. I'll cover the debt schedule, so you get an idea of what the debt schedule will look like. And then we'll end with financial analysis, because as you heard, there were a number of changes to financial analysis coming in this release. All right, so the test package I'm going to use is Acme Snowblowers, which is kind of apropos given the weather here in Minnesota. So we're going to go ahead and I didn't say Minnesota. We're going to go ahead and click into that package. And I'm going to make this a test package. So to do that, I'm going to go into my edit. And from my edit screen, I'll just scroll down here within the package details section. There's a question that will show up. It's kind of at the bottom, obviously, and it just says, is this a test package? And if I answer this yes and save my changes, then that means this package will no longer show up in my reporting, so it won't impact any of your reports. And in addition to that, if I go to my home page and customize my page, we also have a test packages widget you can add to make it easier for you to access any test packages that you've defined within your Spark platform. So that's one way that you can more easily get to the test packages that have been set up. All right, we're going to go back to my Acme Snowblowers loan package. I'm going to go ahead and click into it, open it up. Let's talk through some of the snippet updates that are coming in this release. And we're going to do that first by going to sources and uses. So we'll just jump into our sources and uses. And since some of the information that you're going to see here is relevant for some of the other demos that I'm going to go through, I just want to kind of highlight a couple things. So it's a pretty basic loan. It's a $100,000 loan, SBA 7A loan. We have some additional financing from a community bank for $50,000, and then I've got my owner's equity documented as well. Primary use of proceeds here is purchasing equipment. And you'll notice here my commentary is blank. So we released Snippets a couple releases ago. And obviously to use Snippets, you simply click on that drop down. And then you can go and say select a snippet. And then you can go and just select a snippet that's been defined. So if I wanted to include this equity snippet, I'd simply click select. And I'd get a lot of gibberish there in my commentary section. All right, so that exists today. And that I know it's helped out a lot of people when there's a lot of redundant text or information that you seem to type from loan to loan. But one of the things that we've been able to do or have added to this release is the ability to define a default snippet for a specific commentary field. So the way to set up a default snippet is you go to the Manage Snippets option. And as long as you're what we call a global snippet administrator, that's someone who can declare this is a global snippet that I want all my users to use. As long as you have that level of permission, you can now designate a default. So I'm going to go and select this sources and uses guide. I'm going to identify that one as the default. Now, where this can be beneficial is if you have guides that you want your credit analysts or your loan officers or your BDOs to follow as they're going through an analysis process, you can now include those guides by default in each of the commentary sections. So I'm going to save my sources and uses guide here as a global default snippet. Go ahead and click save. And I'm just going to leave sources and uses. And then we're going to go back into it. And now that I'm back into it, you'll notice that that commentary automatically got popped into the bottom here. So again, that's just an example of how default snippets will work. If nothing exists in the commentary field, whatever's declared as the default snippet will show up. Now, after I've visited this page and I want to update it, so if I'll say the equity amount is 15,000, but that's all I'm going to change. If I save my changes, obviously the next time I come into sources and uses, it's going to include what I had updated. Now, there is a drawback to defining a global snippet. I want to make sure everyone's aware of what that is. If I don't want any sources and uses commentary and I just clear it out and I click save, you'll notice that it popped back in again. All right, so again, if there's a default snippet that's been identified that you want to show up every time someone visits that field, if you clear it out, it's going to show up again. So the way to get around that, if you do want a default snippet, is you can do something like not applicable, NA, whatever. So if you have fields where you don't necessarily want a default snippet to show up every single time, then we recommend not using the default snippet capability. All right, let's jump into one additional snippet change, and that is in our SBA eligibility review section. So we're going to jump into that. So prior to this release, the commentary fields within SBA eligibility review were just plain text. So when I say plain text, it meant if I came into this field and just started typing in, I couldn't bold, italicize, underline, use bullet points, order lists, etc. It just was straight text that you could type in. Well, we've made all of these commentary fields what we call rich text fields. And because they are rich text fields, we now have the snippet capability. So I can go ahead and select the snippet and then insert that snippet into that field. Now, this user experience is probably slightly different than what you're used to. So if I click out of that, you'll notice that that toolbar goes away. So in order to use the toolbar, I click into the section, the toolbar shows up with the rich text capabilities. Clicking out will hide it. All right, so that's just an important thing to understand, that the user experience is slightly different. One handy thing you can do now with this is you can declare a default snippet. I don't know if I set this one up, but if oftentimes you have kind of default verbiage that you include within your SBA eligibility section when everything has the all clear, if you want to call it that, you can now define default snippets for each of these sections. So if I always want all owners are citizens to be my default, so I don't have to type that in every time, and I'd only update it if I had a non-citizen principal, then it's less typing I have to do, less keystrokes. All right, let's move into our debt schedule overview. So I'm just going to go down into debt schedules. And right out of the gate, this is going to look different. So prior to this release, our debt schedule is really, it was every business and individual commingled in one table. So we've changed that. What we've done is now we have the ability to define a debt schedule per entity, where an entity is either going to be a business that's been defined, or as you can see down below, an individual that's been added to Spark. By default, if you haven't created a debt schedule for a business or an individual, you'll see a button show up that says create. So in this example, Acme Snowblower is my borrower. I haven't created a debt schedule yet, so I've got a nice create blue button to make it obvious that if I want to create one, I go ahead and click that button. You'll notice that within this table, we're now going to summarize what that debt schedule looks like. So if I drop down to Jack's Lawn and Garden, an affiliate, I can see that we've captured debt schedule information as of April 1st. There's one entry in it, total current balance of 15 grand. I can see my monthly payment and my annual payment as well. And then these will total up from within this summary view. If I want to drill into Jack's Lawn and Garden, I simply click my update. And this should be a relatively familiar experience where we have our as of date for Jack's Lawn and Garden's debt schedule. as well as the individual debt schedule items down below. But let's go ahead, instead of using Jack's Lawn and Garden, I'm going to go ahead and create a debt schedule for Acme Snowblowers. So let's go ahead and click create. And one of the things that we've done is we're now going to pull in information that's already been defined within the sources for this current loan. So we've got this current project grouping that's going to show me that I've got a $50,000 loan, proposed loan coming from Community Bank. And then we've got the $100,000 current loan for Acme Lending, which is the organization that I work for. And we're automatically going to pull in, obviously, the balance, if it's fixed or variable, the terms, the rate, current balance, payment, etc. So that's all going to just pull in automatically for you within the debt schedule so that you can view it here. Now, I can't change it here. If I want to make changes to it, I simply click into the view terms. It's going to take me into Spark's standard terms area that you're all familiar with. If I want to go ahead and give this debt schedule a date, I'll go ahead and select today. But then let's go ahead and add an entry. So we talked about simplified data entry of debt schedule, and this is an example of how that's accomplished. If I simply click add new entry, I now have an easy way to quickly enter a debt schedule item. You'll notice in addition to this grid, there's a details button. I'm going to cover that shortly, but the same information that you're familiar with our debt schedule entries is available from the details. We just wanted to make it easier for lenders or BDOs to quickly get in debt schedule items through this grid type experience. So let's go ahead and add a US bank debt. And I'm going to make this an installment loan that's going to be variable. And it's going to have an original balance of $50,000, term of 120 months. And I'm going to give it an initial rate of 8%. And you'll notice that as I entered in my original balance, my term, and my rate, it's automatically calculated a payment for me. If that payment is incorrect, you can update it. And if you update it, we won't overwrite what you've changed it as. So we just want to quickly calculate that payment, again, to try to make it easier for you. In addition, we'll calculate the annual payment, so then everything totals up. And then at the bottom, I can see all my totals. Let's go, and I know that the current balance of this debt is currently $15,000. So let's go ahead and enter that. And I'm going to go ahead and click details here. It's going to automatically say my changes. But what I want to highlight here is the fact that that full screen experience is still available here. So now I can see all the entries that I just entered in that grid view, but now I have additional information I can provide. If you know the origination date, go ahead and set it here. I can enter in a maturity date. And we're also giving you the ability to change the interest method. So we're going to default to the interest method for the current loan. But if that's incorrect, you can choose any of our other interest methods. Changing that will then change what the payment amount is. You'll have the ability to designate if the debt is past due, if it's same institution debt, if this is government debt, as well as if it's collateralized or not. I'll go ahead and save and close that, and it's going to take me back to my debt schedule for Acme Snowblowers. I'll save and close this screen, and now you can see it's moved back to my debt schedule summary. So again, showing all of my business debt schedules with the new debt that I added for Acme Snowblowers, as well as my personal debt schedules below. The last item I want to cover as it relates to debt schedules is guarantor analysis now includes the personal debt schedules as well. So not only can I access it from here, I can go into my guarantor analysis and go ahead and edit Jack Frost. We're going to update Jack's analysis. I'm going to go ahead and click into debt schedule. And again, same general user experience that you saw before. We have our as of date, we have our debts listed below here, as well as our details screens and the ability to add new debt schedule entries. Now, I'm sure a lot of you are thinking, great, we're getting closer to what we really want to see, and that is we want to automatically have our debt schedule flow into our cash flow. We weren't able to include that in this release, but that will more than likely be available in 6.8. So again, really what that means is based on the type that I'm designating here. So you'll notice that now for personal debt schedule items, the type is going to be different. So we're going to have auto loan, credit card, home equity line of credit, installment line of credit, etc. Depending on how you classify that personal debt, we're going to have that automatically flow into the cash flow section, into the according expense or debt subaccounts. So just know that that's going to be coming. We're not quite there yet. All right. I'm going to go ahead and leave my debt schedule, and let's jump into some of the other financial analysis related improvements that are going to be in this release. All right, so I've already created a financial analysis, but just ignore that. I'm going to touch on that. I'm going to use this one in another one of my demos coming up, but let's go ahead and create an analysis. This screen hasn't changed all that much. I'll highlight what's changed here. Number one, we're still going to require you to select a business. Down below, you're going to see some new templates that are available. The first one is stressed debt service analysis. If you don't want it, you can click no. If you want to include it, go ahead and click yes. There's no template associated to this, because when you include a stress debt service analysis, as you'll see shortly, it's going to stress if you're using our historical debt service, it'll stress a pro forma debt service, and it'll also stress your global debt service. So each one of these debt service statements will include a stressed section. In addition, we now have a net worth reconciliation, which I'll touch on as well. If you don't do a net worth reconciliation at all, we can turn this template off and it will never show up. If you do net worth reconciliations periodically, because you're doing SBA loans, and I believe net worth reconciliation is required for loans 350 and greater, then obviously you'll want it turned on. If you don't need it for a specific analysis, you simply turn it off, but in the case that you need it, turn it back on. And then finally, we have our financial peer comparisons. I've got my RMA data integrated with this instance of Spark, so I can turn that on through by simply choosing yes there. So that's going to replace our ratios tab. And then finally, down below here, now again, you'll have to believe me, I didn't go ahead and create these periods ahead of time, but what we'll do is the first time you go and create a new financial analysis for a package, this is more of a go forward change, we're going to automatically create periods for you based on how the settings are set up within your Spark environment. So right now, I've said I want to automatically create 3 historical periods, an interim period, and then 2 projected periods. So there's 3 different settings. 1, the number of historical periods you want to create. 2, do you want an interim period? And 3, how many projected periods do you want? If I didn't want for my analysis projections, I just unchecked them. If I wanted projections but no historical, obviously I'd uncheck the historical. So that's going to kind of come now and make it a lot easier for you to create a financial analysis within Spark. So let's go ahead and create this one. And once it creates the financial analysis, I'm going to talk about some of the sub-account specific changes that you're going to see. So I'm just going to expand this out so we have more screen real estate. And I'm not going to enter any data here, so I'm just going to highlight some of the key changes. Number 1, interest for the current loan. If you're using this standard sub-account, this sub-account is going to pull in the interest, again, as it says, for the current loan. But prior to this release, this would get pulled in for every financial analysis you created. It will now get pulled in only for your borrowing businesses. So if it's a non-borrower, so if it's an affiliate, we're not going to pull that in. Historically, we would. Now we're not. Let's jump into one of our debt service coverage statements here. Again, highlight a couple things here. Interest for current loan, again, is only going to apply to borrowing businesses. Existing business debt, this is now going to pull in from your debt schedule. So this is showing me my annual payments based on the debt that I've documented so far. This is just existing business debt. And then down below here, you're going to see that there's our stress analysis, which I'm going to cover shortly. But let's go into my pro forma. The pro forma is going to now look at my proposed business debt as well as other project debt. So proposed business debt, sub-account's always been there. That's going to pull in your current loan. Other project debt is new. This is going to show any additional sources of funds. And if you remember back in my sources and uses table, I had a $50,000 loan, proposed loan from Community Bank. That's where that line item's coming from. So regardless of how many additional financing sources I've added to my sources and uses, that's going to all flow into this other project debt. So we included these tooltips to give you an idea where this information is coming from. And again, if it's not a borrower, we're not going to pull in those values for you. Same with my other project debt, only included for borrowers. And again, as I already mentioned, there's my existing business debt. If you need to override any of these for whatever reason, you still have the ability to override those. And then whatever value you enter in will take precedent. All right, the last sub-account change I want to cover before I jump into stress analysis is our personal cash flow. So whether you're using our personal cash flow sub-account or the personal income, personal debt combination, that's only going to apply to borrowing businesses. We're not going to pull those in for affiliates or non-borrowing entities. All right, let's jump into our stressed analysis. So again, each of our debt service templates comes with that stressed analysis if you have it turned on, and it's going to show up below. So we're going to pull in the total available cash flow, which is going to be the same line item. And again, not very interesting here because I didn't enter anything in my income statement. That's going to be the same line item that's coming in from up here. But the key difference is now we're going to stress all variable rate debts that have been defined. So in this case, my proposed business debt with a 2.5% rate shock is moving up from 14,792 to 16,462. You can see my other project debt was also a variable rate loan. And then finally, there's my existing business debt from my debt schedule. If we override it, this is an important thing to note, if I've overridden it here, we can't stress it because we don't necessarily know how you calculate that payment. But if you don't override it, so in this case, there's my 7,280, it's going to show it as what the stressed value would be here down below. So now it's 8,096 with a 2.5% rate shock. If you want to change what that default rate shock is, that's possible to do from a global standpoint within your environment. So if you need any assistance with that, reach out to Spark Support. We'll make it a default for your instance. We can't default it by product today. It's going to be default for every product that exists. But we will let you configure that per financial analysis. So if I wanted to increase this to 4%, I can come up to my settings here. And you'll see that not only can I increase my shock rate, so I change it from 2.5 to 4, I could actually turn this off for this specific debt service. So if I didn't even care about stress analysis anymore, I could turn it off here. I can always have the ability to go back into my settings, turn it back on. Let's increase our shock rate from 2.5 to 4, save my changes. And if we scroll down, our stress analysis is now going to show the 4% rate shock, and then my values obviously have changed. All right, let's jump into moving from stress analysis to our net worth reconciliation. So again, that's going to show up as a new tab if you're including that statement type. I'll go ahead and click on it. So for those of you who aren't familiar with what a net worth reconciliation is, I'm not going to claim that I'm an expert, but we do have people on the team that are experts when it comes to financial analysis. So just know that the net worth reconciliation that we have is an area in Spark where you have the ability to verify that the net worth of a business, this business I'm analyzing here, that's the balance sheet analysis is consistent with the information that's been recorded in our income statement analysis. And within our net worth reconciliation, we'll show the variances that exist and give the analyst the ability to comment on those variances. So the first time you come into that net worth reconciliation, it's not going to be set up yet, because what we're doing is we need to look at two different periods in order to reconcile. So to set up the net worth reconciliation, I'm going to go ahead and click this blue button that says click here, and it's going to give me all the periods that exists. And I know I want to include 2016 as a period, and now it's going to ask me, well, what period do you want to reconcile that with? Well, I don't have a 2015, so I'm going to choose none. If you don't have a period to reconcile, we're going to ask you what the beginning net worth is, and I'm going to go ahead and choose 250,000. I'm going to also reconcile 2017, but I'm going to compare that or reconcile it with 2016. We'll do 2018 to 2017. I'm going to skip my interim, but I'm going to do a year one, and we're going to compare that to 2018. Once I've set this up and click save, it's going to go ahead and create my net worth reconciliation statement, and it's going to start pulling in information that may have been entered in both the income statement and the balance sheet. Now that I've created it, I'm going to leave this financial analysis, go into one that already has information entered. So I'm going to go ahead and click done. Let's go ahead and go into the Acme snowblowers. That's complete. I'll click on update analysis. We'll jump back into our net worth reconciliation and I'll expand this. And I'm just going to talk through where this information is coming from. So if you're familiar with the net worth reconciliation, hopefully this all makes sense. But this first line here, we're going to focus on 2016. The beginning net worth value is really the total equity from the balance sheet. If you remember, when I created it, I entered that in because I don't have a prior period. So this is total equity from the balance sheet for the prior period. So I manually entered 350. This net income retained is going to default to the net income from the income statement for the current period. So that's where this 84,500 comes from. If you want to override that number, you can. So you can go ahead and click on that edit. I can adjust that to 50,000 if I want. If I want to revert it back, you simply click on that revert icon. It's going to revert it back to what was calculated in the income statement. These next sub-accounts are going to show me the changes in net worth. Since this period doesn't have a corresponding period to reconcile, these are going to default to be editable, again, because we don't have a 2015. Same with our other changes to net worth. These are all manual changes that you as an analyst would be entering in. And then at the bottom, we'll show you what the ending net worth is. And if you're curious what that is, that's going to take the beginning net worth plus the changes to net worth from the balance sheet plus any other changes to net worth. We'll show you what the actual net worth is. And again, if you're interested in what that is, go ahead and click that tooltip. That's going to be the total equity from the balance sheet for the current period. And then we'll show you whatever variance exists. So these other periods, since I was able to reconcile with an existing period that was on the balance sheet, you'll notice that these are all going to be read-only. So this, as an example, my changes to paid-in capital here of 20,000. If I go to my balance sheet for 2017, so we're looking at our balance sheet now, we're going to look at 2017, which is my second column. The change in net worth for my paid-in capital is 30,000 to 50. So that's a change of 20,000. That's where that number's coming from. So we'll go back to our net worth. There's my 20. And you can see these others, there isn't a change, so that's why the calculation's 0 and 0, but in this case I have a change in common stock of negative 105,000. So in this information, the data that I've entered in is obviously not necessarily real. Just want to give you an idea of how our net worth reconciliation functions. And then like all of our other statement types, we have a separate commentary field down here below for analysts to enter any commentary related to the net worth reconciliation. All right, finally, this is my last little demo here. I realize I'm running over. I'm going to cover comparisons. So this is what gets turned on when you've asked the Spark team to turn on the RMA integration, which gives you the Advanced Comparisons tab. Again, as Emily mentioned, this is a premium feature. This does come at an additional cost. So if you're interested in learning more, reach out to the Spark team and we'll get you in contact with someone to get it set up for your instance. So let's kind of walk through how our comparisons work. Starting here at the top, you can define what region you want to select. So it's going to default to national, but if I want to choose central or south central or north central, I could choose that region. You then select a sales range. So in this case, I'm going to say all companies, but I do have the ability to filter this by asset size or by sales size. Once you've selected your settings here, go ahead and apply your settings. That will save it for this financial analysis. We'll show you what year this data is from. So in this case, this is a demo data set coming from RMA. So it's a 2010 RMA publication year. The sector is manufacturing. And in this demo data set, all we have is data for flour milling. So just bear with me here, but flour milling is what we're looking at right now. And there were 49 companies within this data set. The next section here is the financial ratio peer comparisons, which is going to show you the information from your financial analysis, along with the peer comparisons. And I'm not going to go into details, but as you can see, there's a number of ratios and peer comparisons that we have from RMA. If you want to turn any of them off on a per analysis basis, I believe you can do it globally. I'll have to have someone on the Spark team correct me if I'm wrong, but I believe we can set that up globally. But in addition to that, you can, on a one-off basis, determine which items you don't want to see. So if I wanted to turn any of these off, I'd simply uncheck them. But as you can see, the list has grown significantly of what we now include here. Go ahead and save my changes. So those are our financial ratio peer comparisons. But in addition to this table here, we have our financial metrics peer comparisons. We have a couple small tweaks that we need to do with it, so just ignore the data that you see here. But again, this is going to show you broken down by the income-related metrics, asset-related metrics, and liabilities-related metrics. Your information from your financial analysis with the industry average, and these should all be percentages. So ignore the fact that it says dollars. And then at the bottom, we give you the ability to put whatever commentary you want on your comparisons. Now, we talked about stress analysis, net worth reconciliation, and these comparisons. There's corresponding credit summary sections or loan memo sections, credit memo sections that are available and will be automatically incorporated into your analyses. If you're not interested in those, again, reach out to Spark Support and we can turn them off. But we'll pull this information that you're seeing in the financial analysis automatically into all of your credit memos. So with that being said, that brings me to the end of the demos today. I really appreciate everyone hanging on for an additional about 13 minutes. I'm just going to pause and see if there's any questions that anyone has. All right, so no questions yet. Oh, looks like we've got a question here, or at least someone raising their hand. It's just Tanner raised his hand for 7 minutes. Thanks, Tanner. Maybe that was a high five, I don't know. All right, here's a question. From Tanner, oops, thank you, Tanner. All right, I don't think we have any questions, but again, well, first question, awesome. Will the demo be in the recording? Yes, everything that you saw today will be recorded. We'll make that available from within Spark. So some of you have asked me recently, let me just collapse this. Where can I get access to those release calls? Those will all be available for you within Help, Release Notes. You'll have quick access to all of our release notes from within here, as well as all of our webinars. So all the webinars can be viewed by simply clicking Watch Webinar. It'll jump out to our YouTube channel where you can watch that webinar. Oh, Tanner wants to talk. So Tanner, I might need to promote you to presenter unless you want to type it in.
No, I actually didn't have anything to say, Eric. I think just technical difficulties on my end, but hello, everyone.
All right. So I've got a question here. Will you be able to do a cash flow analysis before entering in the debt schedule? Yes. So there's no specific order to our financial analysis. So if you created a financial analysis and you're doing a cash flow analysis and you didn't have the debt schedule yet, yes. And I'm assuming, is this personal or business? Business, yes. So from a business standpoint, Tanner, you wouldn't mind muting? I can hear you typing. Yes, you can go ahead and create a financial analysis for a business. Once the debt schedule items or entries get entered in for that business's debt schedule, then those will automatically flow in. It doesn't mean you have to create one before the other. All right. I think those are all the, oh, here's another question. So I will wait. Ah, all right, let me see if I can, I think an audience member has a question, but would rather talk probably than type. So let me see if I can do that. You guys are really making it tough on me here. So I don't have a, oh, here we go. All right. So, I don't know but go ahead with the question.
Hey, Eric, can you hear us?
Yes, I can hear you now.
Hey, it's Darren. Sorry.
Sorry.
On the debt schedule from the portal view, does the affiliate have to be set up? I'm assuming the business has to be set up for that debt schedule to show up.
Yep, good question. So basically, in order to populate a debt schedule, we're going to look at any business or individual. I might try to mute you guys now because there's a lot of feedback. Any business or individual that's been defined on the loan package is available to create a debt schedule for.
Okay.
Is that your question?
Yes.
Okay.
Does that get analyzed though?
Yeah.
So what doesn't get analyzed? You're saying something didn't, remember? Hey, Eric,
Yes.
you were saying earlier that the debt schedule was not feeding into the analysis, so we're just confused over when it does feed and when it does not feed.
The debt schedule will always pull into the analysis. It's going to pull in for the legal entity or the business that you're analyzing. So if you've defined a debt schedule for an affiliate and you go and create a financial analysis for that affiliate, the debt schedule will automatically flow in to the existing business debt subaccount.
Eric, what did you say did not make it into the release this time?
What doesn't come into the release is personal cash flow. So if I have if I've gotten the debt schedule from an individual and they've documented student loans, auto loan, etc., that right now will not automatically pull into their personal cash flow. So that was the connection that doesn't exist yet from a synchronization standpoint. Does that help?
Yes.
Okay. Let's see, a couple questions that came in. So since there are a lot of changes to the financial section, these changes affect any credit memos on Monday morning that are currently in underwriting. So if you've already created a financial analysis and you've got a credit memo that's currently in progress, this is a really good question, what potentially would get updated? So one of the things that we tried to do is we didn't want to impact loan packages that were currently getting underwritten or that were already underwritten. So some of the sub-account changes that we have will only be available if you include the new synced sub-account into your statements. Okay, I don't know if that makes sense, but all of our financial analysis templates our statements are based on templates, and those templates are configured in the Spark backend. So if you have additional financing documented in Spark for a project, for the entire project, that additional financing won't automatically show up within your debt service coverage. That specific sub-account that syncs that information would have to be added to the template. So that's not going to impact it. If you have affiliates that you have financial analysis for, and those affiliates were automatically including the current loan, and you would have never zeroed that value out or removed that sub-account, that would actually change. I don't know if you have that scenario, but that would be an example of something that would change unless you've already generated the PDF of your credit memo. So we tried our best to not have an impact to existing loans that are currently being underwritten. So the period settings, that doesn't impact anything that's already been created. That's only a go forward change. So you're not going to have more periods all of a sudden magically show up. That would be more of a go forward change on new loan packages that you're creating financial analyses for. Hopefully that answered your question. Maybe we'll just follow up with an email out to everyone who's on this call, just to give you an idea of here's things that you may want to look at come Monday morning. I think we tried our best to minimize impact to existing financial analyses, and I don't think you're going to have much negative impact. All right. I don't think there are any more questions. So again, we appreciate everyone for taking the time to jump on the call today. If you have more specific questions, again, just reach out to Spark Support, and we'll do our best to get those answered for you.